The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off Wednesday morning. Markets positive yet again. Quite a couple days right now in the S&Ps, and we are higher by 9 points to kick off the session right now, trading at 61.55. NASDAQ 100 up a solid 0.4%. How about record highs in the NASDAQ 100? Up by 85 points. $22,497, barely in the red this morning, 43,408. And you got the Russell positive by 1. Bitcoin participating in the NASDAQ 100 acceleration. Bitcoin right near highs, up $1,600 at $107,375. We jump to that crude market. How about that bar, right? Check out the weekly going on in crude, man. You give it all back and almost then some. We're back to $64 and change in the price of light sweet crude right now. Positive, but barely, as we're sitting right near $65 in crude. We jumped to notes and bonds, the dollar and gold. We got the 10-year right now. And yeah, we're backing off yet again, but we were higher in terms of making that high of 111.24. You give up about 10 ticks since about 4 in the morning. We're dealing with a yield right now of about 4.32. Okay, 4.32. The yield on that 10-year. Let's see. And yeah, we were down to 4.28 in terms of yield. 4.28 you were down to. Sitting at 111.14. Now, Chairman Powell, he'll be in front of the Senate today. He was in front of the House yesterday. What tends to happen in these events where you have the chairman in front of Congress, he's at the House first, he's at the Senate next, usually the headlines come from day one. There's not, occasionally he'll need to restate if he wants to, but usually you get the vibe from day one, and we got the vibe from day one. And what do we got? We got higher price and lower yield, recoiling a bit, but 4.32 right now on your 10-year. You jump over to the dollar DXY. We reach a low of 97.70. We're trading a little bit higher. I say ever so slightly, just above 98 at 98.19 in the dollar. And yeah, you talk about some selling yesterday in gold, man. Gold hits 33.08. Right now, we're trading at 33.29. And why was gold trading lower yesterday? Because they were selling it, folks. It's just that simple. And look at this technical area we have, whether it's 3,400, whether it's 3,450, whether it's 3,500. You have a ceiling here in gold. And we're down from 3,476. 9 days ago, we're trading at 33.30. Gold off by $3 right now on the session as well. All right, you jump back to the headline that's making news. And yeah, so our own assessments say it may have just set back Iran a few months. Trump says it's set back decades. And you have a leak from the assessment from the Pentagon's Defense Intelligence Agency saying that it did not cripple the core components of Iran's program below ground, including its centrifuges. And those findings are in line with, I mean, this is political or not. It just puts the context out there. We have a truce. I don't imagine. It would be hard for the president to say that Israel and Iran need to abide by the truce and tensions rise. But boy, if that's the case and that starts coming out, I wonder how politically that meanders and if it throws tensions into things. And it is... Yeah, it's a complex situation, man, and now you have the Defense Department and then you have the Defense Secretary trying to throw shade on that. But no matter how you feel, folks, that's why you have journalists, because you have things coming out of any president, and then it's quite a contradiction. And yeah, we got NATO going on at the same time. So you're going to hear a lot. Whether it matters in reality, we will find out. But nonetheless, S&Ps were positive by 8 points right now, trading at 155 as this market shakes off any fears of anything going on, whether geopolitically or whatnot. We got a VIX right now approaching 1707. And it's going to be reports endless about this one, folks. All right, and we'll see what Trump has to say. I think he can probably write the script of what he's going to have to say about this leak, about what the leak says that contradicts him. I don't anticipate it's going to throw a wrench in things, but how does that even make sense if it actually has any type of validity? Okay. Now, let's jump around to some other news stories. And this one's an interesting one. You talk about tokenization, okay? So, Republic, an investment platform, plans to let anyone bet on SpaceX. Now, this is private, okay? But there's no reason why it can't mirror public. They're going to sell digital tokens that mirror the performance of SpaceX's private shares in a move largely untested with regulators. So you're going to have a tokenization of shares on a private basis, okay? The investment platform offers retail investors access to investments typically limited to the wealthy when they're talking about the private investments, private equity. Token buyers will not have access to the company's financials. They won't own an actual stake. Lawyers question if companies like SpaceX are going to fight that. I imagine you would, right? Imagine if you own a company and someone's marketing that somebody can buy a tokenization that buys your company, and in reality, they're not buying anything. I think they're going to have some problems there. But nonetheless, it's coming, man. And it's gonna come. The tokenization of everything, there's no reason why we can't be trading 24 hours a day, 7 days a week on a tokenization. Bitcoin trades 24 hours a day. Think about it. Why does Bitcoin trade 24 hours a day and the Apple shares don't trade 24 hours a day? No reason whatsoever. It's coming. Regulators are going to fight it to a degree. Wall Street's going to fight it to a degree because the lockhold they have on everything. But yeah, Republic's going to let people invest between $50 and $5,000 in the tokens. So imagine. You're going to get people who are putting up $50, and I hope regulators come for this one, because they're going to be selling it like you own SpaceX. And of course they choose SpaceX with Elon's following. But you don't own anything. Yeah. All right, we jump over to Tesla shares this morning. Tesla. We drop off yesterday, give back some of the gains on Monday, but this morning we're up by about $3. You jump over to Apple shares this morning, trading a bit higher. Talk about volatility yesterday on Apple. Up by about $1 to 201. Amazon had quite a day yesterday to the upside. We're trading up by a couple dollars today as well, trading at 214.41. And yeah, we'll come back. We'll take a look at some bonds, folks. 10-year, negative by 7 ticks. And we're still pushing 4.32. We had a 4.2 handle, 4.28 this morning. Stay tuned, folks. We'll come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. You take a look at NVIDIA. So this one out from the Journal this morning, just talking about NVIDIA as they are getting into cloud computing. And yeah, NVIDIA ruffles tech giants with moving to cloud computing. And check it out. NVIDIA is raising spending on infrastructure to help DGX cloud grow. And yeah, you talk about it, man. $10.9 billion. And that's in what they're taking in from multi-year cloud service agreements. Okay. When it launched, it could grow into more than $10 billion annual revenue business. CoreWeave in March is forecasting around $5 billion in revenue this year. But yeah, Amazon's got $107 billion. So the competition is going to heat up. Yeah, you look at CoreWeave, okay, which is operating basically right there. Yeah, they're saying they're not going to, but why would you not? Why would you not run everything? If they're the chips, and it kind of goes both ways, okay? It goes both ways completely. As in, if you're NVIDIA, why wouldn't you get into the business of cloud computing when your chips are what's powering the greatest cloud computing companies out there? But on the reverse side of that, and that's what I want to get to in this article, is you better believe that it goes the other way too. Okay, with the amount of money that these companies are spending, you better believe they're going to try and get into that business themselves. You know, when you're spending tens of billions of dollars a year and more on one product from one company, it doesn't take a lot to think about the fact that maybe you should be the one producing that. And hey, you know, if anybody could do it, everybody would do it. And NVIDIA wouldn't be the only one in town, and they are. They're the leader by a clear gap right now. And we're going to open at about 150 for NVIDIA shares. You're pushing highs of 153.13 to kick off the year. And boy, it's been quite an acceleration from those lows of $86 in April. My goodness, right? You jump around to some of the other cloud computings. Amazon shares going to open at 214, well off the highs of 242 earlier in the year. Apple volatility yesterday. Apple's a different story. As in, even if you take 260 out of the equation, 240 was there. Apple well off the highs. You're sitting at 230 on Apple shares. You jump over to Google. Trading at 169 from 167 yesterday. Microsoft in a class of its own, man. Microsoft, that's a weekly. 491.85 all-time highs made yesterday. And we're going to get an all-time high open at least. What was the open yesterday? The open was, 488. First time you're going to have Microsoft shares open above 490, 491. We're going to open within pennies of all-time highs for that equity. You compare it to something like Apple, right? As in Apple peaked out, just to see the separation that's going on here, okay? Apple peaked out at 260. It was at 240 for a while, from December all the way until March. And you're at 200. Microsoft during that period of time was peaking out at 450. You had a high in the middle of the year at 468. And we're already at 491. What are we talking about here? We're going to hit 4 trillion soon. Better not get ahead of myself, but you only need 351 billion. And what do we got? 7 billion shares? Yeah. Yeah, need 350 billion, 7 billion shares. We need $50. Yeah, I need about $50. 4 trillion. My goodness. You know, it was only less than 7 years ago we hit the first $1 trillion company, which was Apple. And that was in 2018. The trajectory of these companies, man. So around this time, that's Microsoft shares. You've quintupled in price from 100 to 500. You take a look at Apple shares over that time. Apple, first company to hit $1 trillion. There was the acceleration. It was Apple. It was Microsoft. It was Amazon, I think, competing at the time. Apple's trading at 56. You're trading at 200. Yeah, and Amazon was on quite a trajectory to that point. Look at the differences here. So Amazon, 2018, you're at 86. You're pushing 100. You're only at 200 compared to a company like Microsoft. Like I said, quintupled in price from that level. And even Apple, almost quadrupling in price. Jump over to Google shares since that period of time, 2018 or so. Yeah, tripling in price or so. And then for the crown jewel, NVIDIA, in 2018, $5, folks. Up to 150. You talk about some multiples. We jump over to different equities. Oracle shares this morning. This thing's been on a tear. It's not stopping, man. And yeah, quite a jump higher. We're pushing those highs. We're going to open at 216 right now. Oracle's got highs from a couple weeks ago on their blowout earnings. Jump back to the markets here. Let's take a little bit of a look at the price and volume of everything going on. Taking this open interest off just for some clarity. And the one thing is, look at the volume, okay? Look at the volume drop off in these last couple days. Let's zoom in on it. Look at that, right? You get dramatic volume on Friday, June 13th. We have a 4-day trading week. You get some volume to the downside. The last couple days when we've had huge price spread, Monday, Tuesday, both of them dropping off on volume. So a little bit lighter volume. You get some wide price spread to the upside. S&P's up by 9. NASDAQ 100 up by 94 right now. And yeah, we do have NATO going on. Trump says he'll stand with NATO's mutual defense pledge. And that's always encouraging to see. And you have to almost preface it with, in my opinion, but always encouraging. We'll see if any more headlines come out of there. The new spending target is 3.5% via core defense and 1.5% in related investment, including infrastructure and cybersecurity, to hit that 5% of their GDP. Nonetheless, that's going on, so you could see some headlines. You have Chairman Powell. He'll be in front of the Senate, as I said today. And usually, as I mentioned, though, especially on a day like yesterday, there was no surprise in terms of what he was talking about, how the market interacted with it. But yeah, I wouldn't be too surprised if you don't get any headlines. You'll get some posturing from the politicians, of course. But no real surprises usually coming from the second day. All right, let's take a look at Intel. So that was a nice day yesterday. Look at that move. That's what you like to see. With the volume there, you trade up from 21 to 22.69. You take out these highs. You're bumping up against this area. You're also coming into this bar right here, which is, of course, Liberation Day volatility. So you're looking, we got a target at 27.55, a rebuy at 17.60. Yeah, there's the 17.60, right? That's a nice buy. We'll finish this up, and stay tuned, folks. We're coming back with our man Teddy Kegstad as well. We'll talk some Forex. We'll talk some commodities. Don't go away, folks.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Kekstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Kekstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got equities open. S&P's up by 8. NASDAQ 100 up by 90 right now. And right now, folks, we got a treat. We're going to talk to our man, Teddy Kegstad. We talk to Teddy every Wednesday, folks. You can check out his outstanding Forex newsletter right under newsletter tab on the front page of TFNN, the Tiger Forex Report, folks. It's only $97 a month. You get new issues each week. You get a webinar archive in there that Teddy did as well. And don't forget a couple of great webinars under the services tab. Those are only $97 as well, folks. Japanese candlestick pattern, stock and option strategies, and capitalizing on time with calendar stock option spreads. Teddy Kegstack, good morning.
Good morning, Tommy.
So we got enough going on with headlines in this market, Teddy. All-time highs almost on the indices, and we get some action right now. Boy, the headlines, they just keep coming. Trump is over there in NATO this morning. You have the Middle East. Where's your mind at when you kick off looking at this market, Teddy? Where do you want to kick things off?
Well, the dollar's kind of choppy, so right now I like the head fake rally in crude. I think Monday we set a nice sell signal in place for crude. I think that's probably going to be the high. We definitely were butting up against some strong resistance, which we'd already tested the week before. And I like it. We made a higher move high and a higher move low on a daily basis, all in one day. That's usually indicative of a pretty good, at least short-term stopping point. So I think we set a nice high, and I'd like to see crude kind of, maybe chop around where it's at, plus or minus a couple of dollars there. So the dollar index, I think you just have to key off of yesterday's low. As long as we can hold a trade above that, I think you might see a little bit of an uptick in dollar strength in some of the major pairs. If we take out the low in the dollar index from yesterday, then I would say I would be cautious. Then I think dollar weakness. Am I very bearish? No, but I think you'd see a little more of a grind higher with the other pairs against the dollar, like the euro and the pound.
Yeah, just jumping through the charts, and the dollar, especially that DXY, quite a technical area in terms of just bumping against that area. Hey, did you get a chance to look at gold yesterday? And do you have any day? I know the gold bulls, we talk the yen all the time. Mm-hmm. It's just interesting in terms of the dollar movement. Not a huge move on the dollar, and we have so much going on right now in terms of what headline is impacting kind of what's going on right now. But did you check out that gold trade yesterday, kind of pulling back? What do you think of the gold market, if I can ask?
You know what? I think it's kind of in the middle of the range. Where obviously it is in the middle of the range it's been in now for the past few months. I think that it's probably going to test support a little bit. I think especially unless there's any real major shift in what happens with Iran, I expect to see maybe a little bit more of a pullback on the lows. I think that the low, maybe let's see, we get down to 32.50, somewhere around that area. I think you'll find good support there. I don't see why you would get below 32.50, but I also don't think that the high that was set last week, that's pretty much, I think, the upper band of where you're going to get to. So I think you're probably going to be looking for a range trade. Remember, we're coming into quarter end as of Monday next week. We're also coming into a holiday market next week. So that's going to probably put, I would say, odds are, is that we're going to have a trade into this Friday. We'll probably see some crazy, market action on Monday. And then after that, we're going to die, as far as trading. So, let's just be real. You have a holiday, you have 4th of July on a Friday. So you have a big weekend where, come on now, everybody's taking off for that weekend. Everyone's by Wednesday, Thursday. Right? So, no one's working remotely.
Right.
In fact, they're remotely working.
Get the barbecue going. Let's go, baby.
Exactly. So, you have to be realistic about that. So I wouldn't expect any major moves unless, obviously, there was some incredible flare-up in the Middle East, especially with Iran. And I just don't, anything can happen, obviously. But when I look at the way oil retracted, spiking off of what that is, I think that's, we're having this big volatility, like you said, with the daily news, thing, what's going on across the world. I think we're going to have a quiet period for about a week and a half. The world's never quiet completely, but I don't think it's going to be as noisy. And like I said, unless there's something major that would, geopolitically that could change that, and anything can happen, right? So, but let's look at it that way. I'd be prepared for that more than anything else. And even if there is a trade that starts to set up, I think you have to be mindful of how much of an actual move you're going to get, right? I would agree. Like I said, even if gold, like for instance, right now, let's say it turns around today and it rallies. Where's it going to? 34.50, maybe 3,500. I think would be, we spike a new high and then we retract back into the range. So you don't have much of a play. If you're trying to play it long term, I think it's a big mistake. I think if you're going to do any type of small intraday trade, and then you have to be mindful of the environment, it's going to dry. You're going to have volume dry up no matter what over the next week or so. So be careful.
And what's cool is that where the market's actually closed not only for the 4th, which but it's actually closed half a day we get on Thursday. So 1 o'clock p.m. on Thursday. I had to double check that one myself. It makes sense. I guess everyone's out of there. But yeah, we got a half day on Thursday. So that means everyone's taking off half day on Wednesday, Teddy. If we got a half day on Thursday, man, they're out of there Wednesday afternoon.
Right.
The euro. You talk about the dollar. I was taking a look at the euro when we were talking. So is that kind of a similar deal? We got the euro up to 116, kind of when you're talking about the dollar. So that's a critical area. You trade above there, you better watch out. What do you think of the euro trading right now? Because you're bumping up kind of similar, inverse, the dollar, where you get that high from April, the recent high from, a couple weeks ago. What do you think? Is that line up with the dollar?
That's a great question, Tommy. Right now, from the Tiger Forex report, we have the market trading right on our upside target level right now. If we could get a straw, like I said, if the dollar index takes out the low from yesterday and starts to hit support, I think then you'll see the euro push higher. I think 118.85 would be a total spike extreme, but for us to get there, I think it would take to grind higher over the next week or so. I don't see us having any major, like Monday we had a good volume day. You had an outside day. The market showed that the euro US dollar found support, obviously, because now it's butting up against newer move highs, but there's no more gas behind it. It had enough juice just to get us up to that resistance, and we're just not piercing that ceiling. So yeah. I like if yields really get a nice pullback, you get a nice rally in the 10-year and the 30-year. Maybe I just, even for us to get up to 118.85, I just don't see that happening without it taking at least a few sessions, upwards of a week and a half, because of the market environment right now. So there's some numbers that are coming out. It may cause an influence, and then I'd be cautious if the euro US dollar pair gets up to that 118.5, 118.80 area. It's probably going to pull back pretty sharply. So you're going to have to make sure you pick your points and get ready to take your profits really quickly there. Odds are you're not going to see any major trend beyond that. You're pushing the extreme as far as strength with the euro, is what I'm saying right there.
Man, I'm just going through the charts. Quite the price movements when you talk about kicking off the year at about almost parity at 100. I had to double check to make sure. For a second I was like, am I crazy, man? Is that 2024? No. We're talking about 6 months ago at parity. We're at 120 in the euro.
You and I were talking about parity.
Crazy, man. Teddy, thank you so much, man. Have a great day, and we'll talk to you right before the 4th next week, man. Awesome.
Sounds good. Take care.
Take care. Folks, Basil Chapman's coming back to finish up the show. I got to take off, but Basil's going to be back in 3 minutes. Have a great day, everybody. We'll see you at 3 o'clock.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading not long-term investing. Whether you're a bull or a bear, you choose the direction. For up-to-date pricing and performance, go to direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, this is Morning Market Kickoff with Tommy O'Brien, except Tommy had to leave, so this is Basil Chapman sitting in. I'll be doing my regular show at 10, but right now we're looking at the E-mini, which has come back very nicely. It's up 12.75 at 61.58, but more importantly, what we're looking at is, let me just get to the charts right here, there we go, is that the Dow is just a little bit away from yesterday's high, and I drew this in for subscribers to my opening call because we are still long the Dow from way back, 3 times long position in the UDOW. Did have a short position for a brief moment. So what we're looking at is this Chapman wave inside track repellent zone right here. So that would take you to the Dow 40, I think it's about 180 to 43,220. That area is resistance. But what's happening is that you've got a rotation through the other areas. Look at this. The S&P, SPX, there we go. The S&P making a new recovery high. Very close to the 6147.43 all-time high. It's at 6108. Nice action. Let's go to the QQQ, which made a new all-time high yesterday. It's continuing today. Look at this V-shaped pattern in the weekly chart, 540.81. The week of the 22nd of Feb. Slumps all the way down to the 400 area and right back. And what are we doing? This is a leg B. What you want in a leg B is to have a very strong, powerful move. And that's what's happening so far. The week is young. We've still got all of today, all of Thursday, and all of Friday before we get the close. So this weekly chart is going to be important. I should just mention, because I told my subscribers I'll do this in my show as well. Just real quickly, look at this. In the Chapman methodology, if there's a very quick peak A, but especially a peak C to a peak B to a C to a D, that's the second, third, and fourth highest peaks, then you got to be a little careful, because after D, you could get somewhat of a pullback. Sometimes you can get a very, very strong one. Look at this, HIMS, hims and hers, did a quick A, B, C, D, E in the daily, and then slumped from the 64 area down to the 42s. I'm just expecting I'm thinking next week's a little bit choppy. So in the meantime, let's get back to our story. And the story is that the IWM, which is the Russell 2000, is trading down 94 at 213.50. So it's struggling a little bit more. Now, what's really interesting about this whole series of charts that we're looking at, this is the daily, the weekly in the middle, monthly on the right, is that there are a number of stocks reaching all-time highs. Look at this, Microsoft, all-time high. Trading right now at 493. It's up 283. High today is 494.15, all-time high. I must mention that we are long from the 197 area. And wait a minute, there's another one that's also very important for me in the macro look at the markets, and that is Robinhood. Robinhood, finally, I drew this in ages ago to say that in the monthly chart from the August, the month after its IPO in the 30s, it hit an 85 round number high. That's August of 2021, and then cascades down to 681. That is June of 2022. I mean, that's quite something, right? And then it sort of flattens out, starts moving higher and higher and higher, and then it goes to a series of highs, and I drew in two left side, right side price time matches. That's where you try to find the plumb line, the midpoint. Well, sometimes it's the exact low, but sometimes you have to find it with a particular candle. And what happened is I had this as going to 47.84, and that would have been January of 2025. Well, it did that, and then it continued higher, and I had this as next month as the month that it goes back to 85, the round number high from August of 2021. Well, it just did it today. It's a month early. Very nice. We are still long a position from the 16s. I like this. This is all-time high. But now I think we're starting to get to an area that, how much higher can you go without some kind of a consolidation? It's a question. I'm not saying that I know the answer. I'm just saying the charts are still fantastic. What was the other one? We're looking at, look at GE. GE made an all-time high at 257.47 on June the 6th, and then it pulled back. It's making this cup formation, and it's at 250. So it's a little bit 7 points underneath that previous high, and that's kind of what I'm looking at. The chances are that we're going to get some kind of, well, let's just call it a consolidation. And if that's the case, then the most important aspect about this is that we're rotating through different sectors. And in regards to that, I want to just quickly go through some other areas to show you what I mean. Look, gold had a spectacular move. Now, did anyone know that there'd be this kind of conflagration in the Middle East that would turn gold, which historically, when you talk about the Middle East, you talk about gold as being that kind of insurance policy? Well, gold went just the most recent move in the last week and a half from the 34.60s down to 3,300, and now it's at 3,330. It hasn't really collapsed. Look at the weekly chart. It's just kind of consolidating. So it's still kind of in play, but it's lost its momentum to the upside. That's the way I'm looking at it. And there's a good chance it's going to test the 14-period moving average in the weekly chart at 3280. All right. If it breaks under that, that's going to be a longer consolidation phase. Let's look at silver. Silver had followed gold, and then it went on its solar trajectory to its most recent high, not an all-time high, but a really good recovery high in the 37.30s. Now it's at 35.75, digesting those gains. And if you look at the weekly chart is actually still pretty darn good, even with everything that's going on with the metals. This is still very nice. If it closes under 35 any day in the next week, then you're going to see, I'd probably say, a deeper correction. Now what we're looking at is high-grade copper. So high-grade copper is unchanged at $4.89. It's holding steady in the middle of the range. Now, we used to call this Dr. Copper. Why? Because it was a really good indicator of international activity, business activity. If the copper was running sharply, that was usually a good sign. If it wasn't, I don't think it has the same cachet as it had. It's still important, but I just don't think it reflects the same thing. For instance, if you look at wood, this is the iShares, the global iShares Global Timber and Forestry ETF. WOOD is the symbol, trading down at $1.17 at $72.17. You can see that it's broken key support levels. In fact, it looks a little bit like the housing sector. Look, housing sector, there we go. On the right is the monthly chart of the housing sector, pulling back pretty sharply, right? I did have a bit of a rally, but it's kind of stalling. And this is going to be the clue, because if interest rates, and I'll get to this right now, I'll do much more in my show coming up, the Tiger Technicians Hour, but let me just show you. If interest rates, and this all ties together, high-grade copper, wood, the iShares Global Timber Forestry ETF, the Philadelphia Housing Sector Index, and you got to consider interest rates. And where's interest rates right now? Today, down 38 cents in the 87 level for the TLT, that's the iShares 20-year Treasury Bond ETF, but it's been making higher highs and higher lows. And if you look at the TBT, which this is the interest rate, it's the inverse of the ultra-short Lehman, it's the ultra-short Lehman 20-year Treasury Bond ETF, the same one, in a leg, just slightly lower lows and lower highs. It means that interest rates, just for the moment, are not in play as a factor. I'll be right back. The Dow's down 75. Basil Chapman sitting for Tommy.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So just to sum up, this is Basil Chapman sitting for Tommy O'Brien's morning market kickoff. Tommy had to leave suddenly, so I'm sitting in. What we're looking at is in the TLT. What we're looking at here is that bonds are going a little higher, yields are coming down a little bit, and I've been making at least the case to say that as long as yields are off the table in terms of going higher, that's a good thing. If yields are coming down, then we've got to start looking at the housing sector, etc. But if you're looking at Toll Brothers, this is a very choppy move. Look at that. Look at the weekly chart. 9-period moving average very close to turning positive. The MACD is good. Stochastics at under 80% at 76. On balance, volume is quite weak. So it's going to be very important because you want to see I'll talk about that. Maybe I'll talk about it in my show. What's today? Wednesday. Maybe I'll do it in Technical Friday. I'll look at some of the housing stocks. But what I have mentioned is that day by day, I'm starting to see. I wonder if I've even got it right now. Just before we go to the break, and then I go to my show. Let me just check this out. Let me just scroll up. Anything to do with skyscrapers? I mean, on a daily basis, I'm starting to see that. Florida bound. Yeah, Florida is going to, Miami, I think, is going to get one of the tallest buildings, residential buildings, and it just goes on and on. So what I thought was my skyscraper theory back in the 1970s and 80s really wasn't. Someone else had come up with that. But yeah, this is going to be very important in terms of the mega bull market that we are in. All right, so let's just sum up here before I go to my show. We've got the Dow down somewhat. It's just down 43 after such a spectacular move yesterday. So I drew that in here. I'll do it one more time just to show you. This is what I show my subscribers. This is the white charts right here. This is, okay, can I do it? No, I don't have time. But this shows you the inside. Look at this up channel with an inside track repellent zone, with an inside track propellant zone. Look what it did. Beautiful turnaround. And now we've got resistance all the way into the 43,220 area. Break into the 43,350s. I think that's going to be significant. But we might have a little trouble just in the very short term trying to get there. I'll be right back for the Tiger Technicians Hour. That's my show, my daily show, Monday through Friday at 10 o'clock on market days. And I will see you in a